We need to facilitate sustainable development projects. This talks to the work and the precursor to this number that I'm going to be talking to, the 91.3 billion. We do know that as an institution, we can't go at it alone. We are a market maker, and we have to always make sure that we facilitate and enable infrastructure development. From this mandate, we have developed four strategic objectives: accelerate development impact, financial sustainability, smart partnerships, and a future-fit DBSA. How are we doing all of this? We have decided as an institution that will focus on infrastructure development. Infrastructure development is what drives economic growth. Infrastructure development is what brings dignity to citizens of any nation. We're focusing on digital infrastructure, transport, energy, water, and on the social sectors, we focus on healthcare, education, and affordable housing. And the recent thing that we have done as an institution is to then say, with all of these opportunities that are there on the continent, how do we create new industries? We have decided to put risk capital up and support what we call a high impact investment portfolio, where we support the commercialization of new technologies. We have dispersed in various sectors, and I'd like to add that 22% of those disbursements went towards supporting municipalities. Municipalities remain a critical sector for the development, for the Development Bank of Southern Africa. Because municipalities are the institutions that enable service delivery. Yes, we have challenges in those spaces, different forms of challenges. But as an institution, we believe that within what we control, within our risk parameters, we cannot sit and join the critics. We have to show up and say, how do we help? How do we support? What solutions do we need to come up with to ensure and support service delivery for our communities? We have supported under-resourced municipalities. The under-resourced municipalities, those are rural municipalities, through a program that we have developed as the bank called Partner a District. We were very deliberate in this program as an institution, in that we were very clear that those we work with must be willing. It's a willing coalition arrangement. If you are an under-resourced municipality who wants to enable service delivery, who wants to see an improvement in the lives of your people, who wants a strong institution, and who wants to create an economic hub for your municipality, we are ready to work with you. We've had 8 municipalities joining that program. And through that program, we have managed, as part of this 91.3 billion, to unlock infrastructure of more than 2.8 billion, and we have a pipeline of more than 7 billion that we have from the work that we have done. The team has worked really hard in working with the munis to do a diagnostic, a deep dive on the needs, and coming up with the solutions and doing preparation work to support the bankability of the projects and the development of the projects. The work we do is not necessarily limited to the Willing Coalition initiative, which is the Partner a District. We still continue to support many other municipalities with planning work, with revenue enhancement work as well.
We're doing our best to get the economy growing. you'll have to relook at our sovereign rating in the light of what we've been doing as a country. Whilst other people believe that terrible things are happening in South Africa, there are great things happening in South Africa, including the results we're celebrating today. Infrastructure is critical for reducing the cost of living in South Africa, and the provision of reliable and affordable and provision of freight, logistics, of water, of telecommunication. As I said, it does reduce the production costs and thus making us very competitive in South Africa, because if your production costs are low, it means that you are competitive compared to other jurisdictions. I mean, South Africa, we used to compete on the basis of cheap electricity in this country. We industrialized at the back of cheap electricity, freight, logistics. We became competitive, and therefore that simply demonstrates that for us to maintain our competitiveness in the world, it's important for us to focus on infrastructure. We're not the only one who are saying investment come our way. There are other jurisdictions that are looking for this investment, which is quite critical for economic growth. So DBSA, as an imported supplier of capital, you contribute a lot to infrastructure demands, meeting the infrastructure demand of our country. And I see you have provided support worth of 91 billion in the 2024-2025 financial year. But also as a sovereign, we do try to make our contribution to contribute towards economic growth. One of our pillars for economic growth, in addition to infrastructure, structural reforms, is macroeconomic stability. Stability of prices, stability of the exchange rate. If you've got low and stable inflation, it means that you're more likely to have low interest rate. Interest rate is basically the price of money, is the price of capital. And if money is cheap for households, if money is cheap for firms, if money is cheap for government, we raise money ourselves from the market, and money has not been very cheap for us. We pay 420 billion on debt service costs per year. And we know high risk, high interest rates. The cost of capital become high if people believe that the prospects or your ability or capacity to service that debt is low. So low interest rate is also in the interest of DBSA itself, because you raise money from other jurisdictions. And if they doubt that this sovereign called South Africa's capacity to service its debt, it does impact on all of us operating in South Africa. So it is in your interest that we maintain low and stable inflation, which is a necessary condition for us to reduce the cost of capital, but also to protect the value of our money. What do we have to do to get money to flow into infrastructure? In my view, we need to set the right incentives for that capital to move to those infrastructure projects. And reducing the risks associated with those infrastructure projects, it's critical. And as Treasury, working with the World Bank and other multilateral institutions, we are working on a credit guarantee vehicle which is aimed at de-risking infrastructure project or investment